get your latest business news now with Rupiwa Madzena. And Rupiwa, of course, the cost of borrowing went up again today, and it seems like the Reserve Bank governor is not done with us yet.
No. Every single meeting this year, we've seen a hike, and it's set to continue, Sally, absolutely right there. And that is the big story in the business and economic world today, in that borrowing costs are now higher than they were before the COVID-19 pandemic. The South African Reserve Bank raised its repo rate by 75 basis points as it fights price hikes. The prime lending rate at banks is now at 10.5%. For context, the loan repayments on a R1 million house for over 20 years will now rise by a whopping 500 Rand today. Sanisha Packirisamy, economist at Momentum Investments, joins us now to unpack this. Very good evening to you, Sanisha. And you can imagine not a lot of consumers with homes have that extra 500 Rand if they have a R1 million bond. Tough times indeed. What did you make of the decision to hike by 75 basis points as opposed to the 100 basis points that were talked about by other economists? And as you heard from the governor, two of the members of the Monetary Policy Committee opting for a 50% basis points. Where were you in this regard?
Thanks so much for having me on your show, and good evening to your viewers tonight. Going into this MPC meeting, we were initially looking for a smaller increment of 50 basis points until the October inflation print came out yesterday, showing signs of broader-based inflationary pressures. So out of the 28 major inflation categories, there were 11 that showed signs of pricing pressures in excess of 6% in year-on-year terms, and about 40% of the basket was showing signs of inflation breaching that 6% upper band. And in relation to that, we believe that inflationary pressures have broadened in the economy, and we see that the 75 basis point increment decided upon by the Monetary Policy Committee, we see that as being fit relative to trying to rein in those inflation expectations in the economy.
Yeah, what about the argument that has since come about, the announcement, Sanisha, that is the SARB at a risk of over-tightening the monetary policy at this stage, or do you think that they are on course to bring us some reprieve, perhaps in the third and fourth quarter of the coming year?
This is unfortunately a challenge that many economies on a global scale are facing right now. They are staring down the barrel of extremely high inflation and a rise in the cost of living crisis, but at the same time, past monetary policy responses have also added to growth woes, and we are also looking at growth decelerating into next year. And one of the things that the MPC mentioned in today's meeting is actually the risk of under-tightening. And in an environment where you let inflation run higher and hotter for longer, it could mean that the Monetary Policy Committee then have to do a lot more in terms of interest rate hikes at a later date. And that could actually have an even more negative impact on growth as well as on employment in South Africa.
So what are we seeing then, Sanisha, with that outlook that you painted and the mandate that the Reserve Bank has to honour to make sure that they keep inflation at bay as much as possible? Do you think that we're going to be getting more cuts throughout the 4 quarters of next year, or will we see the South African Reserve Bank stop at some stage to evaluate where we're going in terms of that inflation trajectory?
I believe that we will see our own Reserve Bank following the patterns that we're seeing on the global scale. So as an example, we saw the US Federal Reserve signaling towards smaller interest rate increments from here on out, given that in the US economy, we started to see a rolling over of inflationary pressures. In our own domestic economy, and you alluded to this earlier, is that we have seen a split in the committee views, where previously there were members that opted for a 100 basis point increment. This time around, we actually had 2 members that favored an increase of 50 basis points, with none of the members opting for an increase of 100 basis points. And we believe that this is starting to signal a softening in the stance of the Monetary Policy Committee. However, we do still believe that there would be a potential for a 50 basis point increase at the upcoming January MPC meeting in order to reflect those concerns about high inflation expectations and the fact that inflationary pressures are broadening into the rest of the basket.
Yeah, and I mean, in the meantime, as South African consumers are really going to feel the effects of the hike as well as those inflationary pressures. And we're seeing that it's no longer imported inflation, it's become domesticated quite a bit. And so for the consumer listening, that abating of inflation, at least from the 7.6 to lower levels, is this something that's going to push on for a lot longer? Or do you think that we might see some form of reprieve, albeit small?
So now going forward, there are a couple of factors that will benefit us on the inflation side. So we've created quite what we call a high base effect this year. So going into next year, very high food prices and very high fuel prices this year could see inflation rates becoming a bit lower into next year. Services inflation in our economy hasn't actually picked up to the same extent of what we've seen in the global economy. I think one of the reasons being that rental vacancies are still quite high in South Africa and have not yet reverted back to the average levels. And as a result, rental inflation, which is a big component of services inflation, has been slow to pick up speed. So in the context of inflation for 2023, we are expecting a deceleration to come through. That said, the cost of living crisis is still biting into consumers' pockets.
Yeah, and then finally, with the talk of a global recession and the potential for it hitting South Africa as well, how does this latest decision cushion us or not?
So unfortunately, we are in an environment where we have policy homogeneity across the globe, meaning that central banks across the globe are tightening interest rates all at the same time. And that means that our external backdrop that we're facing is a weaker global environment, meaning that there is less demand for South African exports. In our own internal economy, we're facing a soft outlook for the consumer and for the business. So unfortunately, given those contractionary effects of monetary policy, we are likely to see growth in South Africa slowing into next year. And what we saw out of the MPC is quite a tepid growth outlook for the next few years.
Thank you so much for those insights, Sanisha. As always, that is Sanisha Packirisamy, economist at Momentum Investments, wrapping up that big story for us. Interest rates up by 75 basis points. And unfortunately, the SARB is going to continue with its cycle as long as it needs to curb those high inflation rates.